Welcome to Bears in Exile. Today is December 2nd, and this is our update to Vegas Baby, looking at Boyd, MGM, LVS, and WYNN. Now, it's been a while since we've looked at Vegas Baby, but here it is. If you've been watching the daily market overviews, you'll know that we are expecting a move down in the general market, and that should have certainly an effect on the Vegas stocks. And we're going to start off with our traditionally weakest Boyd. Okay, well, we had an ugly day on Friday with Boyd. You can see that we have a bearish engulfing. We are above the major price consensus level, but we do still have the middle Bollinger Band below the short-term moving averages. Although they are not separated, they are not expanded, they are weak. Long-term moving averages are in a flat line. Not a good thing, easy to break through. We can also see that we're ticking down on the CCI. We're starting to roll over in the stochastics. 14-day RSI moving average is pointing down along with the RSI. Slight uptick in the histogram and the MACD. This is a bad looking chart. 60-minute time frame, we can see that in the last week we did break through the long-term moving average bar, flipped it, and are now rolling over. You can see that we have the middle Bollinger Band above the short-term moving averages, and we're coming down for a bar retest. Now, is that going to be enough to stop it? Maybe. CCI very low, stochastics starting to get pretty low, down on the RSI, down on the histogram, down on the MACD, bearish cross. Most important thing, 14-day RSI moving average. It is just barely rolling over. This looks bad. You can also see that using volume at price, our levels, we stopped right at the major level for yesterday. Stopped it right there. However, if we break through that, we have levels at 620 and in the area between 590 and pretty big range, and then the bottom over here at almost 550. But a decent amount of support at 590, 580. That is the key. So if we do break through this, we don't have too much at 620, but there you go, the 590, 580 area, that's the place to watch. And going back to the daily, you can also see that, let me break this up a little, right about $6 is going to be a area for catching, and beyond that, down here at about 570. So have a few levels. Doesn't look good, but I believe it'll be this one right here that is of greatest importance, right about the $6 level. If we look at black box number 1, we can see the minor price trend, and we have overshot it by a good amount. We should come back for a retest of the bottom, which is just below the 580 area. So for it to land in the $6 area will be right in the middle, and isn't that much of a stretch. Now let's say that we don't have a bearish counterattack. Let's say that we're just going to go and fly off and have a major rally that I kind of think will happen after a bearish attack, but let's say that that does not happen. This is black box number 2, the faster, more agile version of our black box. We can see that the minor price trend is curling up, and in addition to that, the major price trend is also curling up, which suggests it is pricing in a move up. If that were to happen, we can see that it has the potential to go up to $8. So if we do not have a reversal, if we do not go back to test the $6 area, which almost lines up with the lower band of the minor price trend in black box number 2. Let's say we don't do any of that, and we have euro fixed. $8 is the target. MGM, my personal favorite for playing Vegas stocks, just because it is so volatile. Um, we can see that we closed below the major price consensus level for the new month. We're still below the long-term moving averages, although we do have the middle Bollinger Band below the short-term moving averages. That's a good sign. Ending with a spinning top on Friday. Unlike Boyd, it is pretty different in the indicators. CCI is pointing up, stochastics are pointing up, 14-day RSI moving average is pointing down, but not at a good slope. Downtick on the RSI, uptick on the MACD with a bullish cross, and an uptick on the MACD histogram. 60-minute time frame. We can see that we have broken out of, with the recent rally, broken out of the long-term moving averages, causing them to do a cross. They do not have good separation at this time, although the short-term moving averages do not look so bad as to warrant a test going down. You can see in the 60-minute time frame the major price consensus level was tested at the end of the day, and it backed away from it. It looks as though we are doing bubble corrective moves on the way up, and so the question is, can this move up be maintained? Well, it doesn't look that great. 14-day RSI moving average is just now rolling over. Has all that room to move to the downside. Stochastics are already pointing down, along with the CCI, along with the RSI, along with the MACD with the bearish cross and the MACD histogram. Notice that we do have negative divergence in the CCI, in the stochastics, and in the MACD histogram. Not a good sign. Going back to the daily, we're going to take a look at our volume at price, and we can see that we are at the major buying zone for the previous month. We are in this little section here. Now, if this were to break, there isn't much of anything really to catch it on the way down, and that is very poor. Even looking back months, we can see that this is the major zone, which evidently is also offering as a resistance at this point, both buying and selling. Very small range. So a breakdown is going to be really bad. Maybe there will be some support in the in the 930 to 940 area, but nonetheless, that is the previous area of the previous low. So obviously, if that were to break, which is very close to the lower price consensus level for the new month, we're in big trouble. If we take a look at black box number 1, we see that the minor trend is pointing down and that we have overshot. That's a really bad sign. If we have a failure at the bearish bar in the daily time frame, we can expect this to go down and re-enter the minor trend, which would be around about $9, which is also the lower band of the major trend, which we are almost kissing on the upside. Not a good thing. Now, just like Boyd, let's say that we don't have a bearish counterattack. Let's say that over the weekend the euro crisis is solved and everything is fine. We can see that the extreme trend is pointing up, pricing in a possible move up, and that gives us a target just shy of $13, which also is just above the 200-day moving average, and which comes in about 12.25 at the moment, and would exceed the upper, we don't have price consensus levels on this chart, so that was a line of resistance that I had previously drawn and not taken out. Looking at black box number 2, we can see that we have overshot the minor trend by a small amount, and the major trend is pointing down. Not a good sign. This is actually saying that if we were to have a serious bear counterattack, which I still think will happen, but it will fail, it is ultimately pricing in about 820. Moving right along to LVS. Also not a good day on Friday. Bearish engulfing, closing below the new major price consensus level. Although we do have the middle Bollinger Band below the short-term moving averages, which do not have complete separation. Not good. We also have essentially a flat line in the long-term moving averages. We are above the 200-day moving average, at least there's that. But we have the CCI rolling over, the stochastics appearing like they may roll over, 14-day RSI moving average pointing down, down on the RSI, slight uptick in the histogram, getting a bullish cross on the MACD. Well, that's kind of a mixed bag, which actually kind of makes sense because this is actually a really good stock. But going to the 60 minutes, it's apparent that we are coming in for a bar retest. We have the middle Bollinger Band above the short-term moving averages. CCI is pretty low, along with the stochastics. 14-day RSI moving average is just getting underway to the downside. Down on the RSI, bearish cross on the MACD, downtick on the histogram. Ooh, that is not attractive at all in the 60-minute time frame. Beyond that, if we take a look at our volume at price, we can see that 2 months ago we had the major price consensus level, and we have just backed off of it. In addition to that, we have previous buying or selling pressure right above us. Not a good sign. Not a good sign at all. However, it would appear that we have significant buying pressure in the area between 45.50 and 44. Now, if we break below that, there is still lots of area with significant volume. Now, if we were to break below 41, big trouble. Big trouble. So, if it does dip down, there is plenty to catch it all the way down to 41. So, nothing like MGM in the aspect of places where people like to buy. So, it seems like a much safer bet, at least to the downside, in regards to the price being caught and maintained. If we look at black box number 1, we can see that we have overshot the minor price trend by a small amount, and its lower band is down here near the 200-day moving average, right under 44. So we also have the major trend that we have also overshot slightly, and its bottom bar is down here at 41, which coincidentally lines up with all of that buying area that we were just talking about, 41. If we were to overshoot that and have some kind of major massive bear attack, then down here at 37.50 would be the target. Now, as we've been saying with everything else, the bear attack does not happen and we just head on up. We could leave the minor trend and the major trend and go up here to test the extreme trend up here at about 50.30, but that would appear to be the extent of what we could expect. Black box number 2, showing that if we do have our reversal, we're actually going to 41, and on the extreme, just shy of 41. How interesting that that lines up with those areas of buying. And if we do have a massive rally from this moment, it is saying 48.50 and 49.40 roundabout. So some movement to the upside possible. Last but not least is WYNN, considered by many to be the strongest, to be the most valuable, to be the most desirable of all Vegas stocks. We can see that we are below a long-term bearish bar, getting the crossover on the middle Bollinger Band, below the current major price consensus level. CCI going sideways, stochastics heading up, the fast getting way up there. Notice the 14-day RSI moving average. It's very low. It is not turning up as of yet. It's actually clicking down slightly, but nonetheless, it is very low. Downtick on the RSI, uptick on the histogram, uptick on the MACD with a bullish cross. I do like this one in that if the 14-day RSI moving average were to turn up and actually get a march to the top, there could be a significant move in WYNN. It is very low in the context of the last several months, so not bad. Looking at the 60-minute time frame, we can see that it broke through the long-term bar due to this recent rally, and it has not acted very well. It's just kind of hanging out, but at least it does have a new series of higher lows. Beyond that, downtick on the CCI, stochastics heading down, 14-day RSI moving average also heading down near the top. Downtick on the RSI, the histogram, bearish cross on the MACD. In the intraday time period, this does not look good. I think that once this resets, so long as it's able to hold its price and not slip too much in the daily, that it will be poised for a very nice move to the upside after the bearish counterattack fails. You know, of course, if it fails, but I think it'll fail. And that does line up just perfect with the 14-day RSI moving average. Very nice chart. This one I'm actually going to be keeping an eye on, and once everything resets and is in proper alignment for a move up, this actually could be a good play. Doesn't mean I'd be doing it on Monday because intraday looks poor. But once all of that is resolved, might take a few days, might take a week, this might be a good buy. And there you have it. There is the update to Vegas, baby. Hope you enjoy it. And as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.